Good afternoon, everyone, and welcome to Stock Market Today for Friday, May 2nd. It's Alissa Coram here, and we've got a lot to discuss this week. We ended things on a high note, and we have some levels that are very important to cover. So, joining me now to discuss today's action, a look at how the week unfolded, and context to put everything in perspective for us is my colleague, Mike Webster. Webby, as always, great to see you.
Hey, nice to see you. I love
Okay.
Fridays.
Yeah. Got that Friday feel good feeling. And we've got a song of the day for the end of the show because, we're all music fans here. So
I forgot to think of one. Oh
you'll
no,
think of one.
the stress.
You have time. If I can
Yeah.
think of one, you and your musical library in your head, I'm sure you can
Okay,
think
I
of
might have to
one.
go back to an oldie but a goodie, so we'll
Okay.
see.
Sounds good. All right. Well, we have a lot to get to, so let's just dive right in. We're going to take a look at the major indexes. So on the day, the Nasdaq closed up 1.5%. Same for the S&P 500. Meanwhile, the Dow up 1.4%, and small caps had a nice day today, up 2.3%, getting back above that 50-day line. Definitely a lot of damage there, but we're continuing to see progress for the Nasdaq and the S&P 500 that we're watching the closest among the major indexes. So continuing to check off boxes almost day after day, Webby, of progress that we want to see. We're not out of the woods yet. There are some things that we are watching for. It's not like we're in a power trend market yet here, but this has been a powerful move since that follow through day.
Yeah, and this is, I think, a great example of why we don't predict. We just interpret, and we just bend with like a tree in the wind, as we always say. And that obviously came from Bill O'Neill, the founder of IBD, and he would always say that, and that's how he would interpret it. And that's what we do here every Friday is just look at where we're at and just say, okay, interpret what is the market doing? Is it normal and natural? What would we expect? And we'll do that throughout the show. But the most obvious thing is the 200-day, right? That black line on there, which is really a dividing line between a good market and a bad market for most people, including myself. Of course, I'd lean heavily on the 21-day, which is the green moving average on there, but that's more from a tactical standpoint. But just
Mhm.
as a way of telling you what type of market environment you're in, you're either in good times or you're in bad times, right? And good times are above the 200-day, bad times are below the 200-day. Now, to get back above it, you have to do things like what we're doing right now, and you can,
Mhm.
just power through it very quickly, or you can, it can just be a grind over a lot of time. Typically, it's a lot of time. I mean, we came really far underneath that 200-day quickly. So bouncing back this strongly, this much in such a short period of time is very rare. It's not something that we see very often, and so you do want to be just kind of cautious about it. But you can't just be sitting in cash, just going, "Okay, I want this perfect market," because
Mhm.
you'll never get a perfect market.
Right.
So this was one where we were increasing exposure from basically from the first follow through day there, and then we had a subsequent follow through day, which is a very important concept, something that Charles Harris, Justin, and I noticed when we did original research for IBD's market school rules, black and white rules, to help gauge how deep in the market you should be, or at least what your speed limit should be. And with that, we just stumbled into how important it was to have more than one follow through day, because we were trying to figure out what was the right percentage you needed for a valid follow through day. So we were just marking them all up on the chart, like, oh, here's a 1%, here's a 1.5, a 1.7, and so on. Then we noticed, wow, when you have a lot of them, that tends to bode well. So it wasn't just like that one, Bill would always say you just need one index to have a follow through day. And it could even be mediocre, and he'd actually be fine with that. But we noticed that you could have, once you had multiple ones, you had just the odds were better. It wasn't foolproof. But then the next thing is getting above the 21-day. You know what? Why don't we go to that list that we Is it a little too early to go to that
No,
list?
we
All
can
right,
go
let's
to
do
the
that.
list. Yeah, so Webby, you have a checklist of what we're looking for in terms of improving conditions. So we're checking things off the list here. Quite
Yeah,
a
and
few
they
of
don't
them.
yeah, they don't always go order in this order, but in generally they do. So we've got a follow through day, the first thing. So we got that.
Mhm.
Then a subsequent follow through day, we had that. Close above the 21-day EMA, exponential moving average, we got that. The low above the 21-day is a big deal for me. We got that. Having
3.
three Go ahead, you read it. You're such
No,
a better
I'm
read.
just
No, you
I'm
do it.
excited. No, we've
You're
got
I'm excited too. So I wanted to just simplify, things as much as possible so you
yeah.
can kind of just know because there's so much emotion in the market, right?
Mhm.
Especially after we had a bear market crash. Everyone thinks of 1987, 1929 when you hear the words crash, or you think of the flash crash that we had about 15 years ago, give or take. But this was a crash what we had, and so that threw everyone off emotionally. Bulls,
Mhm.
bears, if you handled it well or you handled it horribly, still there's FOMO involved, there's fear, there's greed, there's hope. So that's when you want to just go to black and white rules and just say, okay, where are we? So low above the 21 day for 3 consecutive days and closing up. That's a big, big, big deal for me. That's kind of like a deal breaker. Like, unless you get that, you're not really even
Mhm.
starting to get out of the woods. We got that close above the
Check.
50 low, check. Oh, that's like a John Mayer song. Like, two people got that. Something's missing here. But anyways, low above the 50.
Check.
Okay. Holds the 50 for 3 consecutive days.
We're working on it.
Yeah, we're almost there. So, and then the next one, that's the big deal, the close above the 200-day. So we've got to get there, but really 3 consecutive days jumping ahead, but 3 consecutive days with your low above the 200-day and closing up. That's when like, okay, this one might be for real. Because lots of times when you get up to the 200-day, you have everyone watching it as well as computers. So you have algos who are up there and saying, okay, I'm going to short this market because it's at this level that it should roll down. So you're going to have a lot of volatility in a typical market environment. So that's why I like to wait for 3 days or more where your low is above it and you close up. Then the moving averages starting to cross above each other. That's the last thing you'll get, like the 21-day above the 50, 21-day above the 200, and then the 50 above the 200. And so we're not saying that you wait until all of these are checked. This is the gauge of how far you want to put that gas pedal down.
Right.
Now, it's also something I forgot to put the power trend on there when I was creating this. So I'll recreate it and add the power trend, and anything else that like marked highs and lows is something that I left off of this. So there's a few things, and we'll do that
So this
on.
is the baby steps. These are the kind of big picture, step by step things that you want to see at first. And then if it turns into more, you have then sort of this whole other checklist for, what meets a power trend, right? And some of these other things.
Exactly. And if no one, if you're like, what is this power trend I hear about? It is, I'll simplify it. You want your low above your 21-day for 10 consecutive days, and your 21-day above your a rising 50 for 5 days. And that's pretty much it. And
Mhm.
then that kind of changes the tone of the market. And that's where you're pushing
Mhm.
hard. And we're having some debates around the office of, how to how deep in the market, and were we too heavy, were we too light going into this. And frankly, as far as the market exposure for the firm, I think we've done this exactly right, because you don't want to say, okay, it's been successful so far, so we should have gone 100% in the bottom tick. Like, that's just
Yeah.
unrealistic. So you need these things because it's a risk reward. As you get more incremental evidence, you go in deeper. Now, I've gone in way deeper, during this time than what our exposure is, what we've said. But that's because I feel comfortable with knowing that I'll pull the plug if it were to turn the
Mhm.
other way. So some people, if we say 40 to 60, maybe some people are still 20 to 30, and that's their comfort zone. Other people are like 80 to 120. It's whatever your comfort zone is. So we're like halfway there because we're not above that 200 day, and that 50 day is in that decline. Is a risky place, where any news item, we got a positive news item midday today that helped move things up when we were, getting into a kind of a, kind of not stalling, but just kind of running out of a little bit of gas. And then it gave some oomph there, some China related news. But honestly, with the news that we had, I would have thought we would have powered through a few percent higher. So it seems like a lot. We've gone a long way in a short period of time, going sideways and just staying above that 50
Mhm.
day. The low staying above that 50 day is kind of critical right here.
Mhm. So we will watch for that. Yeah, and I would have to say that the other thing to discuss about this week was the impressive resiliency and comeback that we saw on Wednesday, shaking off negative GDP news, the Nasdaq closing essentially flat, the S&P 500 closing higher on the day. We now have a 9-day win streak for the S&P 500. It's getting very close to that 200-day line. We are just 1%, Webby, below the 200-day line. So it wouldn't take much. We do also have that marked high that we're looking at here for the S&P 500. But you're exactly right. I mean, when you have a 9-day win streak, odds, that doesn't happen too often. So we, like you said, we could see some sort of pause or digestion here. And I think you're absolutely right with the checklist being a good way to help you know when to incrementally add exposure. The more positive signs you get, the more you can tactically, where it makes sense, add exposure versus just waiting for, okay, now it's a Friday close and we're back above the 50-day. Now I'm going to plunge in, right? Just doing that incremental decision making, I think, is a really good way to go.
Yeah, and it's kind of like driving a car. If you ever drove a stick, did you ever drive a stick
Yeah.
shift? Okay, so then you know exactly what I'm talking about. You're going through the gears. You're not just, it's not like you're driving like an EV where you just gas it down and it just goes. It's
Hmm.
you're in first gear, and if you're not in LA, you can get out of second gear, and and so on. Like, so you're moving as you're getting the evidence and the feedback. There's two types of feedback. There's the feedback from the market, the
Hmm.
indexes that we're talking about, but there's also the feedback from how you're doing, the
Yeah.
decisions you're making. So let's say you had this and the market saying, it's ripping, but for whatever reason, the stocks you're picking aren't working. And there's nothing wrong with that. There's a style that happens is like, sometimes it's breakouts are working or pullbacks are working or upside reversals or just buying strength that, just a momentum chasing type of thing. There's a time and a place for each market environment. And so let's say you're an upside reversal buyer, which is something that I like to do, is one of my favorite things. But we've only had one of those. So, on that key day that you mentioned, that was a huge day,
Yeah.
because we were really entitled to go down for a couple days and then move up. That would have been normal and natural. So it's stronger than normal and natural based on that test of the very successful test of the 21 day. But so, you're if you're getting that feedback that your things just aren't clicking, then you want to dial it back more. Now, if you've like latched onto the leading stocks and you're making progress, well, then that's when you push it harder. So
Hmm.
it's the market feedback, but your own personal feedback that you're getting that should determine how deep in the market. Now, the next thing is, where would a normal place for it to pause or to chop around? And as you're getting close to the 200 day, I mean, we could easily gap up above the 200 day and then fade, or we could just gap and go. I mean, that would be great. But today, I've late yesterday and today, I've eased off the gas on for myself personally, because I had hit it really hard early on and just wanted to kind of lock some in and just kind of that's just my style. Like
Yeah.
when things are who was it? I forget, but someone said I think it was Jim Rogers, that when he just waits for a stash of money to be sitting over in the corner, and then it goes over and picks it up. And that's kind of how I was looking at this: is we had that nice setup, pressed it really hard. Now we're up, and the odds aren't really in your favor to be super heavy right here. It's easier to, you don't want to go to cash, but you just want to just say, okay, we could probably have some volatility around this 200 day and just kind of ease off, maybe put in neutral for a little bit.
Yeah. Okay. Do we want to take a look at some historical dates to
Yes,
help give added context?
yeah, before we do that date, I want to go
Sure.
back to the 98 one that we always go to. And let's just go out to end of November of 99 or 98, sorry,
Okay.
of 98. I'm
Yep, you said it. You said it. And then we'll also go to the NASDAQ.
yeah, yep.
Yep, yep, yep. Here we are.
So this one was very interesting that when I went through the 200 day, the second time, it was like the 200 day wasn't even there. Like it didn't, you wouldn't think the 200 is there. But since you had the S&P, let's go to that on the same date, because this was more normal and natural. As it got up to the 200 day, you had fluctuations. And
Mhm.
that's what I'm seeing, because that's more normal. What happened with the Nasdaq was very unusual during that time frame. But this is why I've eased off. Not because I think we're going to blow apart. That's going to be really based on whatever the news is, and we don't know what the news is going to be. But you had your easy money there as it was going through the 21 day, and you had a few days of real oomph. Then it just needed to pause and digest around there. Now we could go to the other dates that I sent you,
Sure, let me get those
and those are on
queued
the
up.
Nasdaq.
Yeah, and the other thing that I wanted to point out, so yeah, the digestion, that does feel more normal. The other thing though that I wanted to point out though is the 21-day line. So you have this 200-day ceiling, but then you also have that relationship with, on a more tactical side with where you are versus a 21-day line. So I'm interested in looking at these dates that you have for us. I didn't look at them ahead of time, so we'll have to see what we're about to learn. So 10/22/1981, Webby.
Yeah, so I wanted to show another possible thing. And this is really based off of an internal conversation that we're having, where some people are, thinking that we should be deep. That's always the way it is, and that there's nothing wrong with that. So I just wanted to see what could end up happening. So here we're kind of in a similar position where we were able to power back in 1981. We're able to power through that 21 day. The low was able to stay above the 21 day,
Mhm.
as we had, well, with the exception of that little test, but in spirit it was above it. And then just a little bit above the 50 days. So kind of where we're at right now. So similar setup. And again, that crashed through the 200 day. I mean, that was a massive crash. Beautiful upside reversal at the bottom. Now let's go out to the next date.
Okay, so we're gonna go to 12/8/81 now.
Yeah, so this is to your point about the 21 day. I'm always paying attention to it. And then when you're above
Mhm.
it for a while, and then you finally crack and close below it, it doesn't even have to be a major close below it. But if it's like this, in this position, closing at the lows, yeah, I'm going to back away in a big way. Now, if it had a big spread and it closed below it but was in the upper half, then
Yeah.
that's a touch of gray. But let's go out to the next date.
Okay, our next date is 3/12/1982.
Okay, and so point to that 21 day exactly, and that's why you back away from there. And then the reverse happened. Your high got stuck underneath the 21 day, and that's a dangerous place to be. The only time, if your high is getting stuck underneath the 21 day, that you want to play heavy is if you get an upside reversal, because then you have something to trade
Yep,
against. And
right.
that's ugly. And this is possible, right? I mean, what is China going to do next week, Ellie?
Well, we'll have to see what happens with the trade war negotiations.
And what is Trump going to do?
I know
President Trump.
exactly what's gonna happen.
Yeah, so no one knows, right? Like,
We
you
don't
know,
have our Chris I left my crystal ball in the attic.
Oh, but well, go get it. I'll wait. So we can go out to the next date.
Okay, our next date is 8/24/82, so I will go there.
Okay, so then now again, it's trying and it's getting back above.
Hold on real quick, Webby. You're chopping up. I'm going to pause your upload and we'll see if we can get him back. Rachel, it's not letting me pause his upload. Wonder if you might be able to try. Okay, Webby is frozen, but that's okay because we will get him back shortly. All right, he might need to leave and come back. So, if that's the case, we will continue with this precedent analysis when he comes back. So, thanks for your patience, everyone. And so, you do have some of these counter trend rallies, like what we saw now. We did get that follow through day. That was before we even got back above the 21-day line. But we really love using that as a good guide, and we will continue to keep an eye on it. As of now, in our current market, we are above that level. So I'm going to go back to the current charts here.
Can you
And
hear me?
Webby, you are back right when
Oh
I
man,
changed
that
it.
scared me. I don't know what happened. I was like, man, Allie must be mad at me. She shut my camera down.
Oh no, it was your internet. So I'm gonna pause your upload, and hopefully that'll help. You just started chopping up a little bit, so I'm gonna go back to the 8/24/82,
Okay.
1982. So you were about to start talking about this one.
Okay. Yeah. So the point was you had that other move above the 21 day right there. And then it was like, what's our good friend Scott Sinclair always says, rinse and repeat. You're above the 21 day, you're pushing it, close back below it, you back away. Then the same thing is happening over here in August of 82. Any market historians will understand that date. And we can go out to the next one.
Okay, the next date is in 83. So we're going to go to 3/31 of 1983.
Yeah, and so this was to show that it just sliced through that 200-day, like kind of like it wasn't there that much this time because it had time to digest it. If we can go out to a weekly, if you don't mind.
Not a problem.
Yeah, so you can see those three major waves down. And so sometimes the news flow or the market just isn't ready and it just needs time um, to move back up. And so we don't know which one we're going to be. So that's why I wanted to show this one as well as the 98, because it could be either, and you just want to have a game plan for both. Because like you said, your crystal ball is up in your attic, and you're just too lazy to go up and get it.
Yep, I
we
am.
can go. We can go back to normal. Well, you know what? Go out to 1984. Just put a 84 on there, and just to see how big that move
Mhm.
was. It was massive.
Yeah. So when the power trends, so this turned into a power trend at some point and held for quite a while, that power trend, I'd imagine.
Exactly, it did, and that was one of the biggest ones. And so again, it's when your low is above your 21. Let's go back to the daily and
And
go out to
I'll
80.
change it to 83, and then I'll go to the daily. And I'm actually going to back up a little bit more. Okay.
Yeah, probably even more. Yeah,
Even more.
go to like January. Okay, that's good.
Yeah, because
So
we can see the whole
yeah,
thing.
you can see that the low is above it for 10 days, and then right when I would count it from when your 21 day, the green line is above your 50 day for 5 days. That's where your power trend is starting, and it stays until
It's like
the
right when you got above the 200 day that
yeah. And
coincided.
then it stays on until the green line goes back through your 50. So it was on this whole time. That's your power trend, and that's what you're waiting for. So time is on our side. We don't have to push it hard now. You'll get another power trend that could be, in a few weeks, months, or whenever. Yeah, that's when when it ended. And in future episodes or webinars or something, we'll talk about how you don't
Mhm.
wait until it
Yeah.
crosses to you're still taking action. Yeah, you break through the 21 day. That's where you really are
Mhm.
making most of your selling decisions.
Right. Yeah. But this is, we've had a couple of power trends in 2023 and 2024. And that is the time, like you said, where you can really press on the gas. There's a clear visual reason for that. So I
Yeah.
think that's sort of the distinction between where we're at today, even though we are seeing a number of positive signs out there, a number of really interesting looking stocks, but we haven't seen this type of trending market yet where you're pressing on the gas, you can trust the pullbacks and reversals a little bit more, but that's a fun market to be in.
Exactly. And we'll get there again. We don't know when, but we will get there again. And so far, we're on the right path, and we just have to take it one step at a time. And this is the time to trade, but not the time to trade heavy with that gas pedal down. Certainly not until you get back above that, that 200 day. And as we said with the checklist, you're low above it for at least 3 days and closing up, then you can say, okay, you can kind of take a deep breath. Sometimes it does it for 3 days and then comes crashing back through. But if you waited for it to be above it for 50 days, then you're going to be waiting too long. So there's that balance between both. And just remember, a bull market doesn't start in one day. A bear market doesn't,
Yeah.
end in one day. So there's time, and even if you've been flat-footed this whole time, that's okay. Just baby step it back in.
Yeah. There's still time.
Yep.
All right. Well, let's next go. Now, do we want to take a look at the
Whatever
sectors
you want.
real quick?
Yeah,
Okay,
sure.
we'll do a quick look at the sectors. I'll just do a resort just in case to see what was down or up the least rather today. Usually it's, what was down the most. Now it's what was up the least. So I think, these four right here, this is a good sign for us when you have your staples, your utilities, your real estate, and your healthcare, all, these more defensive areas. If those are at the bottom of the list, then that's good for us as growth investors. So I'll just quickly go through those. Up, but definitely lagging. Energy, this has also been a laggard lately. We did get some big earnings reports from some of the oil majors out this week, but this is an area that we haven't really been focused on for a while. XLC, this is communication services. You have Meta and Google in this one, I believe. So,
Yeah,
so progress here, Webby, getting back above the 50-day line, albeit a declining one, but we are seeing this bounce back here.
can we pull up Meta, because that got back above the 50-day today, I believe. And yeah, and the 200-day. And so I'm not saying you don't buy it here. Like,
Right.
I mean, you could if that's your style, but it's a sign that's rounding out the right side. And normally it would take, bases tend to be relatively symmetrical, so we took a long time to get down, and probably take a long time to move up. Sometimes a little bit slower,
Mhm.
or a little bit shorter on the way back up. But this is a good sign. And also, just while
Good
we're
for
at
the
it, just
market.
pull up Microsoft. I know it's not in this
Yeah.
group, but that was an important one for the market, that got back up above its 200-day in a big way, and then it kind of lifted
Yeah.
all boats.
Yeah, this was huge for the market this
Yep.
week. Absolutely, totally agree with their big index weightings. Consumer discretionary, you have your Tesla and your Amazon in here, not looking quite as strong.
Mhm.
With XLC, you did have that 50-day has held above the 200-day line this whole time. That's not the case with consumer discretionary. So we maybe need a little bit more time for those moving averages to right themselves. But we are seeing a continuation of that recovery, just like we are in the major indexes. And Amazon earnings came out this week. That was another one of the big reports. And so I think the fact that, this obviously didn't scream higher, like we got some really positive reactions from Meta and Microsoft, but the fact that it didn't fall apart when it could have, it's been sort of maybe in the crosshairs of some of the trade war drama this week. So I think the fact that it hang in there and it didn't just have a blow up is, I'll take that as a win.
I just have one thing to add. My internet could go down again because you've got this under control.
That's
Uh,
what
You,
you wanted to
you,
add?
yeah, you said everything that I was going to say. I'm like, I was about ready
Cool.
to say that. You said it. I could just shut up. So keep
No,
going.
we're good. Okay, the tech sector ETF XLK back above the 50-day line. So this obviously looks like the Nasdaq quite a bit. And actually, I do have a question for you. I'm going to try to remember. We'll just get through a couple of these. Here's look at materials back above the 50-day line. But if you look at that relative strength, since the follow through day, this has been a lagging group. So keep that in mind and just screen for quality. And you'll, if there are leaders in that area, you will see them. Here's a look at industrials. We are seeing some notable improvement here, I would say, back above its 200-day line. A little bit of a pickup in the RS line this week. I'm actually not sure what the big names is. Is it like your Boeing and your GE that are big in this one? I actually don't know. I'm going
Yeah,
to be honest.
I would have to go in and see, but off the top of my head, I would think so. But I should know. I know a lot of the other ones, but I don't spend a lot of time looking at the industrials,
Okay.
frankly.
All right. So I actually just pulled it up. It looks like a GE, RTX, formerly
Mm,
Raytheon, Uber is in there. So that's
that's
got to
probably
be
what's doing it.
helping.
Yeah.
Caterpillar, Boeing. Okay. So I wasn't too far off. All right. Okay, let's now round things out with financials. This was the top performer today, Webby, and I know you found this to be pretty compelling.
Yeah, so I was trying to we were talking earlier today, I think it was on IBD Live or maybe it was just an aside meeting that I was looking for things that weren't already screaming up there, like the Microsoft being out of position is good for
Right.
the market, but what do you do with it?
Yeah.
So, like JP Morgan, Goldman Sachs, they're having double bottoms. Berkshire, has got earnings next week in good
Hmm.
position. So there are a lot of them in the group. Their earnings for the most part, besides Berkshire, are already out of the way. So XLF is a place that we were looking for to possibly add to swing trader, but we were backing away from some exposure today, just going into the weekend as we're getting up to the 200-day. Otherwise, if this would have been like on a Wednesday or Tuesday or Wednesday, we probably would have put this on there because it looks like risk reward makes sense because you're only a few percent away from your 50-day. So I would use your 50-day or yesterday's low as your stop on here. So I think this is the best thing that I've seen from a sector standpoint to buy now. It's not the strongest, but which you can tell by that RS line has just been dogging it, but it is at least in
Hmm.
position that it should go or could go.
Yeah, definitely. Okay, so I remembered my question for you, Web, because I know there are some times where, you're looking at RSP. So we could give that a quick little shout out. That got above the 50-day line on Friday after a little bit of a rejection there Thursday. But QQQ, it looks like the NASDAQ 100, of course, you have your mega cap techs in here. We're right at that 200-day line. Are you looking at this at all in your mosaic, or are you really just focused on the composite and the S&P 500?
Oh, no, no. I look at Qs. I do have a position in Qs and in SPY. I did reduce some today because of being around the 200, and I just want to see, if we can make it through the 493.62, that last marked high. That's a big deal for me. Then I will just add that exposure back. But it was kind of like, easing off the
Yeah.
gas, putting it in neutral, so to speak. And that is a big deal. I look at RSP, Qs, the Nasdaq Composite, SPY, and I will look at like things like the IWM, but
Mhm.
it's like not so much the VXUS. The rest of the world, excluding the US, was really notable today.
Yes.
I made a mistake with that yesterday or the day before, and removed it to just lock in some gains on swing trader, and then the world gapped up, and so I would do the same trade over again. So I wouldn't really call it a mistake. It was
Right.
like it was getting up there. It was, if it looked like it was going to stall for a bit, and I was going to, try to get back into it
Yeah.
with an upside reversal. But, that's what happens when you're selling into strength. Lots of times they'll keep going more than you
Right.
expect. You're never going to get it out on top tick unless you just get lucky.
Yeah, exactly. I mean, and we're in a headline driven market. We have to remember, in addition to sort of the caution flag being under the 200-day line for the major indexes in the US, because just as easily the China headline could have been, you know, China walks away from trade talks and raises tariffs even more and starts striking deals with Europe and Korea and this and that. And, so the headline could have gone the other way, and they still can go the other way.
Yeah, it's going to be a long weekend because the news flow could be really, really good or really, really bad, or so you're always in a news driven market. There's always a news driven market, but there are times where it's a bigger deal. This is about as big as it gets. You think back in time. I
Yeah.
always go back to like the Cuban Missile Crisis back in the October 62 time frame is a big deal. Then you had, of course, the '07 to '09, which was drawn out. So instead of like 13 days, you had, you know, well over a year from November 1st of '07 to early March of '09. I mean, that's a long time of headline risk, and even post 9/11 there was a lot of headline risk. So right now we're this is about as big of a deal as the headlines will get, that impacts so many things. And you can see it with this global market. It feels like the money is still flowing out of the US. And I think that is going to continue for a while. And when that continues, I mean, you could be seeing years of that going on. I'm not saying that the US isn't going to do well, but go to a monthly on this one, because the rest of the world, by looking at that RS line, it's just straight down. I know our good friend Chris Gessel would love that RS line, wouldn't he?
Yeah, this would be a pass for him probably. But if you look at those moving averages, you do have that crossover. So the relative strength in 2025 has been very notable.
Exactly. So it does feel like one of those shifts, and
Mhm.
things like this. Once the momentum starts, because this is like reallocating capital from a risk standpoint. If you're a big money manager managing hundreds of billions of dollars, you're thinking, okay, there are all these unknowns in the US. Why don't I just start spreading my money out outside? Even if you get a bunch of those guys and girls just doing it in a little bit, instead of 5% allocated to foreign markets, changing that to 10%, collectively, that is a big deal. And that's what we're seeing with these flows. So this to me looks like it could just be the very beginning of a multi-year move.
We'll have to see. Okay, so we talked about XLF and the financials. Let's take a closer look at Berkshire Hathaway, the B shares here, BRKB. We have a little bit of a setup here, an entry point heading into earnings early next week. So, your thoughts, Webby, on how to handle something like this?
Well, look, the great thing about Berkshire is you've got one of the smartest guys who's ever lived, at the helm there, and he has people underneath him. So eventually, if he were to retire, so to speak, that he's planned accordingly. But he likes having a bunch of cash, so you've got that going for you. He's got companies that he owns outright, like a See's Candy. He's got insurance companies. He's got big position in Apple, even though he's reduced it. So he's spread out. And let's go to the monthly on this, because it is worth noting that this has been kind of out of favor for a while, even though the price has gone up, but relative to the S&P, it hasn't done anything for such a long period of time. And now that RS line on a monthly basis is starting to poke up, and that's really kind of a sign that this trend could continue. But you going into earnings, you never know what are good. Well, I don't want to say good friend because I've never talked to him, but I would love to talk to him, because I mean that guy's got some of the best one-liners, and he's, man, what a special human being he is, and it looks really good for a trade too. Yeah.
Yeah. So key to think about risk management and what that means to you. in earnings season, as we've been saying. So something to think about. I can't think of an investor who trades more differently than you, Webby, than Warren Buffett. Y'all
Oh
are
yeah,
on pretty opposite ends of the spectrum.
yeah, and he was opposite ends of with Bill as well, and then you always have to have respect for someone who does things so well in their thing, and you can't there's no one like Buffett who does what Buffett does. There's a lot of people who try to do that but
Yeah.
can't. He has the ability, and he'll back away from positions. Everyone just thinks he just buys and holds forever. No, he buys and holds the right things forever. He will back away and he'll make mistakes. And a little homework assignment for folks to do is I would go and get their, forget what it's called, like the shareholder letters or something at Berkshire. And back in the 90s, I called Berkshire and asked for them, and they sent me some bound ones for a few decades, and they were just filled with gold because Warren will, write out different things, and it's just each one is like a book and a chapter in a book, and that's what everyone should do as soon as don't do it now. Wait until we're done talking. Don't be rude, and go Google that, and you'll really have a lot of fun for the weekend. And he's as good as it
Yeah.
gets in that department.
Okay. Well, let's also talk about Spotify. This was another notable ticker we wanted to discuss this week. Earnings are out of the way. Full disclosure: we both own a position in this, Webby. As of today, crossed that 621.20 area, as well as the high from the day before earnings that was 627.50. So it had an initially negative earnings reaction, but it was able to have a decent close. And then Wednesday and Friday really was able to right itself here.
Yeah, I took a little flyer going into earnings on that, bought it, right before the close, thinking it was going to pop. I mean, it was just, I had some risk chips to spend, and I spent them. And as soon as it gapped down, I just, got out of it. It's one of my favorite companies from what it does, because it's something I use every day, both from music as well as for podcasts. I'm a big fan of Huberman Lab podcast, probably one of the best health podcasts um, out there. I'd suggest everyone watch that. And you've got lots of great podcasts out there, and you can watch this or listen to this on Spotify, something that you
Yes, you
guys should
can.
do. So when you understand what they're doing, that's kind of like what Warren Buffett would do. Is he would invest in what he likes, Coca-Cola. Andrew Huberman from Huberman Lab would tell him to stop with that stuff, but that's okay. So this is a company that you can understand. I went very heavy in it today because that news. Let's go back to the daily. I had built a heavy position in Palantir, but we've got earnings on Monday, so I reduced that exposure dramatically and shifted it over here. Normally, don't go that heavy out of the gate, but because you had this perfect base, and on top of that, you had that shakeout on the
Mhm.
earnings, and when you have a negative earnings reaction like that, but as you mentioned, late in the day it came back, that tells you that there was
Yeah.
sponsorship in there. They're saying, okay, yeah, people don't trade the way we trade for short. I'm typically shorter term than you, but most of the big institutions are out there for months to years, not days to weeks or months.
Mhm.
So with that, they were in there supporting it, but it seemed like it was going to be dead money for a while,
Yeah.
which I thought it was going to form like a base next to a base, but then you get this news out there. And why don't you explain the news?
Yeah, I'll briefly explain the news here. So Apple, as I'm sure folks are familiar with, the purchases made in the App Store. Historically, Apple has taken a cut of that sale, 30%. So there was a court ruling this week that basically said that Apple can no longer do that. So that means that if you are, making money off of App Store purchases, you are not having to give Apple that cut. So Spotify definitely a big beneficiary here, Webby, and I think the news is important. We love talking about catalysts, but this weekly bar as well. I think that big outside week upside reversal, that this weekly chart here is looks
Beautiful.
yeah, looks really, really nice.
I mean, you don't get setups like that. Now, what could happen? There could be something news related to that where Apple comes back and fights it with some sort of appeal. I don't know. I'm not a lawyer and I don't pretend to be one. But if that happens, then you're going to have just as negative of a reaction as we had a positive one today. But there's times where you've got to put, in my opinion, you push the chips in, and this one was lined up for me to do that. And we'll see how it ends up playing out. And of course, I put it on Swing Trader first because I care about Swing Trader more than I care about my own trading, which is kind of silly, but it's just how I'm wired. So I put that on and waited the 30 minutes and then bought it myself. And so we'll see how that plays out. Now, it should not trade if it's normal and natural. It shouldn't trade back underneath or close back underneath really today's low. That will be my line in the sand on
Mhm.
a personal level. Sometimes if the market is, let's say we have a wild day on Monday or Tuesday, and it brings everything down with it. This one trades a little thin at
Mm.
times, so that could be very easy to come down through there. But just like what we saw on the post earnings action, is where does this one close? So if we get a close below today's low, I'm sure I'll be back out of it.
Okay. Thank you for walking us through that. Let's now go over to DoorDash. This was another double bottom base breakout this week. And full disclosure, I did pick up some shares today. I've been tracking this stock for months, really. I mean, and I traded it last year, September, through early this year. I've noticed the relative strength as it's been forming this double bottom base, and I do have conviction in the story here, in addition to seeing the strong fundamentals quarter after quarter. If I would have been a little bit more aggressive, I think I would have purchased on that upside reversal on Wednesday. But again, because of where we're at in the overall market, underneath the 200-day line, and just thinking about incrementally pressing that gas, I was adding exposure elsewhere on Wednesday. And this didn't quite have that oomph. But I think we did get a little bit more oomph today here with this breakout, with shares up 4.5%. That does put us even closer to the earnings report next week. But we'll have to see if this is another double bottom base breakout that can hold, like we've seen a couple of others do, Webby.
Yeah, so I have a position this as well now. And kind of a little funny story. I did put it on Swing Trader a few days back, and within like a couple minutes of putting it on, we got like almost like within a minute, I think it was, we got some news about them acquiring something. And you can go to the Interday and just see wherever that was. Maybe it was further back. Yeah, did you see that bar? Yeah, that was
Mhm.
Webby putting it on Swing Trader, and then they they put out news that they were acquiring someone for a few $1 billion or whatever. And so when a company acquires someone, they
Mhm.
their stock goes down, the other one goes up. It's just how the market works. And so we backed away from it there. And then with it being close to earnings, we weren't going to put it back on because we'd like to give it a 10-day minimum window. But you can go back to the daily on this. So we were deciding, what stocks we were going to talk about, and slacking back and forth. And something I put in there about Dash because I don't like it long term because I'm concerned with like Waymo and Tesla, in what they could end up doing with Uber and Dash. And I know that Uber, is already doing stuff, but you just don't know. There's a big risk there. So long term, I have a negative bias towards it. It could end up being great. They could use self-driving for
Yeah.
this aspect and really launch, but it's just this overhang for me. But send something to you like, man, I really should have bought it. And as soon as I type that, I'm like, bought it. Because when you realize that, the thing that I've learned over
That's
the
so
years is
funny.
the moment that you realize you've made a mistake, either not buying something or buying something, just fix it. That
Yeah,
simple. I'm like, I just said that, buy it within 30 seconds,
I love
and
that.
that's what you have to be flexible. It doesn't mean it's going to work out, and it could gap up or gap down on earnings. And we'll see what type of cushion we have
Mhm.
before the earnings date if I want to
Right.
stick around in it. But it looks good. What's important is and the reason to talk about is there's so many double bottoms out there right now, and that you want to pick and choose the ones that look like this. This is a normal looking double bottom. There are some where the second bottom is so much lower. Just pull up the Qs for a second. Qs or
Mhm.
SPY, either. Um, you see how with that double bottom, that second bottom went down so much further than the first one. So lots of stocks are going to trace that out. And so the stronger
Oh,
ones are the ones where your
mhm.
second bottom held up
Like, this one was
better.
kind of a funky one. It's working, SE.
Yeah.
It's working now, but this is sort of what you're saying, where it's just not very symmetrical with the 2 legs.
Exactly. And what you can do is go back to like the Qs, for example. You can do a closing range on what I call it is a bottom one. So you just take the distance, just like on a bar, just do a track price on any given day. So in there, you see the closing range. It says CLS range 39. That means within that bar, it's at the 39th percent. So if it was at the top of the bar, it'd be 100%, the bottom 0, the middle 50. So you can do that same thing with the Qs at 540.81 would be the top of this big bar. 402.39 would be the bottom, and the 466 would be, you just
Mm,
do the math, on there, and you come up with that percent. Then do the same thing on any stocks that you're looking at, and you want, let's go back to the dash. You want it to look more like the dash, where that is the 169.43 is so much closer to that 155. So it's a positive divergence, and it's something that
mm,
Bill used
mhm.
back in '09. For let's just do it. Go to I'll,
Oh, shoot, he just chopped up. I'm not sure what he wants me to go to. Are you there, Webby?
hear me?
I can hear you, but you are frozen. Try saying something else. I think this is a sign where we're gonna have to take a whatever you wanted to look at, we're gonna have to look at on IBD Live on Monday. All right. Looks like we lost Webby again. What a shame. Okay. Well, I think in terms of managing risk heading into DoorDash earnings next week, like Webby mentioned, we'll have to see what the profit cushion is like. So it does report in 5 days on the 7th. So that is next Wednesday. So we do have a couple of trading sessions to see if it can follow up on this strength after the breakout. And then we can make our assessment from there. And by the way, I do personally disagree with Webby's take on the longer term prospects for the likes of DoorDash and Uber at this time. And I think that they're not going anywhere for now, but it will be up to them to see, okay, how are they going to embrace innovations like robotics and self-driving cars and that competition that was mentioned from the likes of Waymo and Tesla. But what I don't think is going away is the need for people, and I know you're back, Webby, so that's
Okay, good.
great. What I don't think is going away is the convenience economy and people having stuff delivered to them. So whether it's through a DoorDash or through Tesla one day or drones, we'll have to see. But we will be following the charts and the quarterly fundamentals along the way. So we'll have to
And
see.
we'll skip the thing just in
Yeah.
case my thing goes out. I'll just try to share my trade station charts.
Yes.
And let's
Let's do
see.
it.
I'm sorry, I haven't had internet problems all day.
I know.
Um, I'm at my parents' house, and they actually increased their
Bandwidth for you.
bandwidth for when I'm out here. Okay, can you see my
Yes.
chart? Okay, so we'll be fast with this just in case that happens again. So we're going to do SPY on a weekly, taking a step back and just looking at the candle to see if we can learn anything from this. And this is a big, beautiful candle building on last week's even better outside week, and it closed so nicely. And we had another one today. So what we like to see is what we saw back here in 23 out of those three waves down, where you just get this wall of blue for a while. We will see if that ends up happening. We'll keep an open mind to that possibility. The weekly certainly looks that way. Now looking at the Nasdaq, same basic thing, so nothing different. Always just looking at both to see if there's something unique there. Let's just look at the composite as far as the regression line. Can you still hear me?
Yep.
Okay. And we're starting this on February 18th, and we ended this one on
The
right there.
22nd or
Yeah,
the
the 23rd
23rd.
on this one, because it broke through that line and we want to stay above that. It wasn't quite 50 days, but that was the logical place
Yes.
to stop it. And so you want to stay above that, which would really be like 16,500 ish, or in that
Mhm.
ballpark. Let's look at SPY. Same basic thing there, same basic dates that we were using. And if you were to come all the way back down and even near this line, we would have big problems on our hand. So that's a good thing to see. Now, looking at the 50% retracement, we do this in all sorts of ways. For SPY, we've been doing the March 25th high with the low on April 7th. And we were wanting to stay in the northern hemisphere of basically above 529.11, which is the midpoint of that area. And that's exactly what we're doing. So picture perfect there. We will look at the NASDAQ composite. And this one, just taking a step back and looking at it from the February highs to our recent lows, this week or yesterday, we made it back above that 17,447 midpoint, and we want to stay above that and build on it. Going over to the levels chart, here is SPY. I haven't changed any lines on here yet, and I just want to see what progress we were making. So we were able to make it through the 549.68 level, which was the low from back here in around March 13th. And now we want to get back above the 570.95, and then of course the 575.35. And once you start going through levels, you don't want to you want to go in one direction. You don't want to start going backwards. So that's why we're keeping those on there. Let's look at the composite. So this one, we made it through a new level, the 17,925 today, just barely above that. And it looks like that must have been the low that I was using from March 4th. Sometimes there's some other levels over on the far left that we're not seeing that came from. So we want to stay above that. So that's constructive. Now going over to the simple charts of just looking at the 21-day exponential, which is the blue moving average on there, and looking at the low versus that, or the high versus it, depending on what position you're in, and you want to see that expand. And that's exactly what we saw today. A very successful test. Typically, I like to see that low stay above the 21-day. But if you're going to touch it, that's the exact way you want to touch it. You touch it for a moment, and then it's like, oh, that's hot, and it bounces right up. So I mean, that is freaking beautiful. Let's see. And here's the composite, and same basic thing there. So I'm going to stop sharing on that.
Mikey
And
likes it.
yes, I do. And let's see. Do you remember that commercial? You're
No,
too
but you
young
guys
for.
told me about I'm too young for
Oh,
that one, but you guys
I
told me
know.
about it.
Yeah, you're so lucky. Let's see. Life goes by quickly. Let's see if we can get this next one here. Can you see my SPY?
Yes, I can see SPY.
Okay, so here it is with a Webby RSI, and what we're focusing on here is the low versus the 21-day expressed in ATRs, which is what we have down here. I'm going to make this a little bit bigger. So at this point, it's doing exactly what we want to see, where you start off with your first blue bar here, which is on the 25th, and that was your low was above it. Then you want it to build just like it's building right there. And in fact, let's go back to those three waves down back in 23, and you see this big wall of blue that happened, and that is measuring your low versus your 21-day, and that's what you want to see. So we uh, hopefully over the next week or so, this gets closer to 2.5, or even more. When you're starting out in a move, it's good to see that get really high. There's nothing that is too high. There are levels that are too high when the trend has been established for a long period of time. That's more like climactic type of action. But right now, we want to see more power. If this just stops at this level and doesn't really expand from there, that will be a negative sign. But we will deal with that if it happens. And the same thing here on the Nasdaq is looking the same way. I'm going to just be quick in case my internet goes out, and I'm going to go over to the Bob Marley charts, which is our off high. And again, with this is just measuring your distance from your off your high in terms of ATRs, and it uses
Mhm.
the low, not the close. And so the green area is 0 to 4 ATRs off your high, and yellow is 4 to 8, and anything more than that is where you don't want to be. And now we just ventured back into the green area at
All right.
3.6. That's good, right?
Yeah, we like
And
it.
yeah, Mikey likes it, and maybe Ali does too. And
Yeah.
the Nasdaq is almost there. And then let's take a look at RSP since you brought that up
Yeah.
earlier, and that's almost there as well. So we still have
What about the
room.
Qs?
Accuse.
Let's see.
There you go. That just
Right
ventured
there.
right in there. Just
Yeah.
yeah, like about 3.9 ish. So
Cool.
good
Okay.
stuff.
So, yeah, I know we want to wrap. So let's sum all that up. With all that being said, what's the game plan for next week?
So obviously, we have to deal with what news comes out over the weekend, but let's just say it's neutral news. Then we are just focused in on the 200 day. Really, that's what it's about on the way up, and how we act around there. Expect a lot of volatility because the algos and everyone's looking at that, and we want to get that low above it and just stay above it for 3 days or more. And we certainly don't want to go back down to that 21 day. Again, we already had one test of it. If we have another test in a very short period of time, that is a bad thing. We've gotten through most of our earnings, important earnings. We still have some of, obviously we have Palantir, which we both have a
Yeah,
position in on
that's coming up
Monday.
next week too.
That's
We
kind of
didn't mention
stress,
yet.
kind of stressful. We'll see how that one plays out, but it's certainly in position. And yeah, that's pretty much. I think we've kind of
Yep.
gone over it, not to get too heavy too quickly, because as we saw with that 1982 example, if
Mhm.
it's for real, we have a long way to go. Now, with the example that we looked at before in like the 81-ish time frame, that's why you really want to pay attention to that 21 day, because if it closes below it, you don't know how much lower um, it can get. And in case I go out, my sound goes out, or my visuals, or both, I'm going to say the song of the week is In Repair by John Mayer. I've done that once before, but it's off of his best album, Continuum. And because the market is in repair, you know,
Yeah.
it's getting there. So, what's your song?
Well, I like songs that are upbeat right now because I
Okay.
think if the S&P up 9 days in a row, we're checking off all of these boxes with that in mind, with in mind that I am 60 something percent invested. Was my song, Let's Go Crazy by Prince. I think,
Ooh,
and then it has a line in it. It says, "Are we going to let the elevator bring us down?" No. So like you said, we could get
yeah.
some bad news, but we're prepared. We're gonna react accordingly. We're not gonna let that shake our mindset, and we'll take things day by day.
Now that
So
is a
for now, let's
great
go.
that okay. So that's a great movie, Purple Rain, one of the best movies out there. So sad that we lost Prince. What was it, like 6, 7 years ago now? In April. But anyways, great movie. Everyone should watch that. Obviously, Purple Rain, the song itself is the best album on, or best song on that album. And yeah, so let's go crazy, but not too crazy,
Yeah, not too
right?
crazy.
Yeah,
Exactly.
60% is not
Yeah,
too crazy.
it's not too crazy.
You're doing
Just,
fine.
optimistic, but not too crazy.
Yeah.
All right. Well, thank you so much, Webby. We appreciate it as always. And thanks so much for tuning in. That is it from us for this week, but we will be back with more Monday morning on IBD Live. It'll be a key day. As Webby mentioned, we've got Palantir earnings coming up. We own that stock, and I'm sure a lot of you out there do too. We're actually going to do a poll on IBD Live. We want to know what percentage of our audience is in it. We know it's widely followed by a lot of retail investors, but also institutions as well, as it was the top performing S&P 500 stock last year. Can it continue its win streak? We'll have to see. It could be volatile. It has a high average true range. So if you want the skinny on how the team is handling Palantir and all of the other big earnings movers next week, make sure you check out IBD Live, investors.com/IBD Live for all the details. We will see you there on Monday, everyone. And then Webby and I will see you back here next Friday. We look forward to it. See you then.